Hey traders, this is Jeff from Zen Trader. I want to update the market timing signal that I do. It has gone negative, indicated by the red down arrow here. It's also right at the upper boundary of this channel, or rather this consolidation here. Let's review here real quick. Back in July we got a down signal and it really paid off. I really gave multiple entry points. This last up signal didn't really work out, but to be able to exit on an up day when the Nasdaq's up 1.5%, it's good because you're keeping your losses small. I actually sent out a alert to my free newsletter subscribers earlier in the day when I knew that there was no doubt that the signal was going to change. Generally, I have to wait till the end of the day to be able to send out that information so they can so subscribers can act in the after hours. But today was one of those days that even though the market appears to be moving higher, everything looks good, we're still not seeing much leadership in the markets. There were a couple nice looking charts. ELGX, WPRT, and ATHN are all names that you should add to your long watch list. So if this particular sell signal turns out to be a head fake, I think those are three leaders that are really going to head higher. So the Nasdaq is consolidating. It's going to bust one way or the other. I am now done making excuses for the long side. I just I gave it every opportunity. I was really thinking that there was some underlying strength when there really isn't. And this is going to be a tricky market to trade here. I think we all need to get a little comfortable with hedging. I think we all need to, for instance, so I'm short now, the SPYs. I exited my long SPY, and because it was pretty much a break-even trade, so I was able to not have that tax loss. So I just went right back into short the SPY. But a few of these long charts that I just mentioned, maybe do some intraday trading on that, like hedge that way, like because I think this market, there is still a lot of indecision in this market. The volatility here, the put call, it's kind of right in an area where it's declining a bit off of its highs, but it's really honoring this uptrend, which indicates that there is a higher amount of put buying, but it's nowhere near the area where a bottom is going to be in. We could really, the markets could sell off and really drive this higher. So this is actually the 10-day moving average. I've actually hidden the put call because this is a smoother way to look at this chart. The TSX, if you look at some of the world markets, those charts look hideous. So sometimes when you're at a period like now, when you've got a timing signal change, you still got some indecision, it pays to kind of look outside, look at what the world markets are doing, look at the neighbor the TSX is doing. And this is actually a very bearish chart. It broke down yesterday. RSI is extremely negative, indicating future losses. This could go up, but I think this is going to find resistance to the 60 and roll over even more. That's even if it doesn't just roll over tomorrow. Like, this is just really bad action. The advanced decline on the New York, this has been, if you look at this chart, this is how I like to look at it, is you had some major strength here in early August, but every time the market rallies, the number of advancers is lower than the previous one, indicating weakness. So each one of these is getting lower and lower. So this is not what you want to see. You'd like to see this getting progressively higher and higher, and so there's more. The internals of the market are behaving better, and then I'm just going to zip through these. These are just some of the weakest sectors that can maybe tell you a little bit about where this market's going. The investment services is very weak. I went through all of the charts. Real estate, really weak. Home construction, household durables, and business training and employment. All of these things are suggesting the markets are going to go lower.